Today we're talking about Joe Biden's tax plan and what I think it means for East Bay real estate. Hey guys, Hans Struzyna with the Gunderman Group at Keller Williams Luxury International. And whether you voted for Joe Biden or not, we're looking at a new tax plan. I mean, frankly, if you live in California, you probably did, statistically speaking. We're gonna cover kind of what some of the high level things that they're talking about are and what I think that might mean for you as someone who might be buying or selling real estate here in the East Bay. If you get value out of this video, give it a thumbs up and subscribe to the channel because I'm gonna continue to put out weekly content just like this and you're not gonna wanna miss it. So without any further ado, let's just get into it. We're first going to start off with affordable housing. Joe Biden has suggested that he's going to put $640 billion over the next 10 years to help create, quote, a financial assistance to help hardworking Americans buy and rent safe and quality housing. That'll be really interesting because that money, or supposedly where that money is going to come from, we'll get to here in a little bit. But that would be really fantastic if we could get some help building affordable housing because the economics of affordable housing here locally just don't work. The housing discrimination is another big part of what he ran on, and he actually wants to create a U.S. housing or homeowner and renter bill of rights, very similar to the one we have in California, which will probably reform the eviction and or foreclosure process further, and it'll be really interesting to see what happens there. Generally speaking, in California, it's very challenging, especially with rent control and some of the other eviction laws that we look at on a daily basis, to evict or to foreclose on somebody. I used to be in the foreclosure space pretty heavily, and I can tell you for a fact that a lot of people live in their homes for multiple years, and in some cases actually 7-10 years without paying their mortgage before they actually get evicted. So it'll be interesting to see if that streamlines that process in any way or if it just further delays the situation. Rentals and evictions, specifically around COVID, he was quoted as saying no one should face foreclosure or eviction because they cannot afford their house due to being affected by COVID. That's going to be really interesting as well. I did a video last week about the market, what I'm seeing, why it's not a bubble, and we did talk briefly about foreclosures. If you did watch that one, great. If you didn't, you can check it out up here. But basically the estimates right now are somewhere in the world of 60,000 foreclosures in the entire state. Obviously the Bay Area will have some portion of that, although historically our area is very low for kind of bank-owned properties and that sort of thing because our equity positions are so high and the value of the homes here locally are equally as high. So I don't predict we're gonna see a whole lot of that, but if people do continue to lose their jobs and get into financial trouble, it'll be interesting to see what he puts into place to prevent them from having to leave, whether it's a repayment program over 5 years or something like that, or it's just simply a stay on evictions and moratoriums like what we've had currently. We'll see. But ultimately, we are not seeing a lot of foreclosures happen here locally, so I don't think that that's gonna affect us a lot. And then same thing with rentals. Rentals fill up quickly, the ones that do come on the market. And because there's a ton of rent control here locally in Oakland, Berkeley, Alameda, all those markets, and we have state rent control as well, that process will likely further be delayed if someone is going to be evicted. So I don't necessarily see a huge impact except for possibly on some of the smaller landlords who may fall in the cracks here. One that I think will be really interesting to watch, especially for those of you who have already bought your homes, is the rollbacks of the Trump tax cuts. Presumably those are going to happen around mortgage interest and local and state taxes, meaning your property taxes and your first $750,000 of mortgage interest can be deducted. Previously we were allowed to deduct the whole interest payment on the home, but now it's $750, which in our state still is over the median home price. That said, in Alameda and Oakland and Berkeley, for most homes that people are transacting on, it's going to be some portion of their house, but probably not the entire thing. So that is one area where they're talking about that $640 billion. That's where they're going to fund some of that money and how they're going to help build affordable housing. So those tax or eliminating those tax cuts are going to be one to really track, especially if you're someone who's taking advantage of those. This one is really interesting, and I find it, I'm not really sure how I feel about it yet, to be totally honest with you. It's the $15,000 tax credit for first-time home buyers. Now, I do have a lot of friends and a lot of clients who are looking to buy a home, their first home, in fact, who could probably take advantage of this. In the past, they've had deadlines on them. You've had to take them over 2 years, and if you couldn't take all of it, then tough luck, you're out of luck. So this is apparently going to be a tax credit that actually gives you money at the closing table as opposed to a credit when you actually file your taxes, and it's not going to have an expiration date. So people will be able to use it over a longer period of time if they don't pay that much in taxes and that sort of thing. And so it could really help the people who are actually affected heavily in our state by coronavirus, the lower wage earners, actually get into a home, especially in areas where FHA financing and lower down payment financing is more the norm. Here in the Bay Area, I do think it'll help people just shave a little bit off the top of closing costs, but to, again, be competitive here, which I've talked about in a lot of other videos, being at or above 20% is really almost a prerequisite. And so for someone who has that down payment saved up, that extra 15 grand on the closing costs might actually push them over the edge to really be able to transact, but I don't think it's going to really push the needle and bring a ton of new buyers into the marketplace who weren't there, because the difference on 15 grand on the closing cost of $1 million property is not substantial enough to bring in a huge amount of people, in my opinion. So I don't think it's going to have a huge impact here locally, but in the surrounding areas and some other counties, I think it will. And the other one, as an investor myself, the abolishment of the 1031 exchange will be really interesting if you're making over $400,000 a year. That is another area that additional tax revenue, that capital gains revenue that they want to see is going to be really interesting, because that's how they're going to fund some of this other affordable housing stuff that they're talking about, is with that abolishment. So you're going to want to really watch that, especially if you're a high income earner who also does 1031 exchanges. Now, that being said, it'll be really interesting to see what accounting comes out of that, because for someone who owns real estate and has an accelerated depreciation schedule, they may be able to get themselves under the $400,000 a year mark to qualify for this, and we'll have to see what the rules actually say. But who could still take advantage of a 1031 exchange. So that's one more to watch really closely, especially as, in my opinion, rent control is probably going to continue to get harder, and it sounds like according to this tax plan and this real estate plan, it's going to continue to get more in favor of the tenants. I think you're going to potentially see people try and go into at least local jurisdictions that are maybe a bit more balanced and moving their investment out of California and into another state or another part of California or what have you. So that could free up a little bit of rental inventory that gets converted into single family. Hard to say on that one for sure, because we just don't know what all the implications are going to be. But ultimately, I think a lot of the investors, especially in Alameda, for example, are local owner-operators. They live here, they're part of the community, they own a couple houses or maybe a duplex. I don't think that most of those people will be over the $400,000 a year mark, depending on how they calculate that. And I don't know that the 1031 is going to go away for the vast majority of people who try and take advantage of it. So I don't think that's going to be a huge impact, but it might on the big corporations and the big apartment owners and those kinds of people. So we'll see on that one. All right, that is what I have for you today. Again, jury's still out on a few of these things. It's all very new. We don't even know what is going to get passed through the Senate. and what is actually going to be implemented and what riders it's going to have on it, and what impact your CPA is going to be able to make of it for you. But it's definitely all stuff to watch very closely and pay attention if you own a home or if you're planning on buying one here in the near future, especially that first-time home buyer credit. That 15 grand, again, not a huge mover. I don't think it's going to bring a ton of people into the $1 million price point, but it's definitely something that will make it easier to transact going forward. If you got some value out of this video, please give it a thumbs up and subscribe to the channel, because I'm going to continue to put out weekly content just like this, and you're not going to want to miss it. So without any further ado, this is Hans Struzyna with the Gunderman Group at Keller Williams Luxury International, signing off for now. See you guys on the next one.